Hello. Company being analyzed today is one global service provider. This is a company which has seen quite a journey. For example, here is its stock price chart. Okay. In around October 2025, one share was worth around 257, 266. Then suddenly, in a span of a couple of months, it zooms up all the way to 623. Okay, it doubles in like a few days. Sorry, a month, a couple months, it doubles basically. And if you look at its all-time history, okay, all-time history, share price history all time, in January 2023, it was 37 rupees, 32, moves up to 140 in October 2024. Then again, we saw the earlier rise, now 623. What's very interesting though is this. If you're wondering what is this, the blue ones, these blue blocks are the quarterly sales. This green one, this green line, you see, this is a net profit margin, net profit. The yellow one is the operating profit, the EBITDA profit margin. All right, take a look at this. Around September 2022, sales were 3.18 CR. Quarterly sale was 3.18 CR. Then it moves up to 12.52 crores, one quarter sale. Then it shorts up in the recent quarters, shorts up to 87 crores for the quarter one of fiscal year 2026, and latest quarter, quarter two fiscal year 2026, shoots up to 134.98 CR. This is an explosive rise in the revenue, and that led to the massive increase in the share price. Yes. So today we're going to analyze what is this company, what does it actually do, does it have any future plans, and of course its financials. So let us start. First, we have a market cap of 1,219 CR, so it's a pretty small cap company. Current price of one share 624 rupees. Okay. Price to earnings ratio 27.8 times. Now, ROCE and ROE are very important metrics. I've noticed sometimes screener.com, this website, it's great, but sometimes it does not show them to be entirely accurate or as according to the company themselves, they report themselves. So we will cover that separately. Let us go to the profit and loss of the company from 2014 all the way to 2025. Here we have sales, we have operating profit, also known as EBITDA, and down we have net profit. So you can see 2014, 2019, 2018, no sales. 2019 certainly 2 CR of around 2 CR with no operating profit or close to no operating profit. Then 2021, 2021 4 CR, 2022 6 CR, 2023 triples to 18, then 64 CR, then 147 crores in 2025. Fiscal year 2025 sales of 147 CR with 25 crores of operating profit or EBITDA, 17% EBITDA margin, which is a pretty good EBITDA margin. And finally, there's no literally legit no debt, very low depreciation, giving it 25 crores of profit before tax. Finally, 18 crores of profit after tax. Last fiscal years was 7, so it doubled basically. So its compounded sales growth over the last 3 years has been a striking 189% compounded. ETM, meaning the previous 12 months. We are currently in December, so 12 months ago, last December. Okay, 334% growth in sales, while the compounded profit growth over the last 10 years has been 68%, over last 5 years has been 129%, last 3 years 159%, and last 12 months, the previous 12 months, 364%. And again, the return on equity, it's high. I've seen it's high, but who knows? But even here, it's showing 42%. That is really, really nice. Now, what does the company actually do? At last, we will go to the cash flows. What does the company actually do? So, one global service provider was formerly known as Overseas Synthetics Limited, established in 1992, listed since 1994. Now, the company has its business in providing services related to healthcare industry and has recently expanded to the field of IT, where it's providing consultancy and development in software and other information technology solutions. So the big business, the main business is what? Very important keyword services. Services in healthcare industry. And then the IT sector where it's providing consultancy and all that. Its vision is to make quality healthcare services and products available to all citizens across the globe. All right. And here you go. Yeah. A leading provider in the field of life sciences and healthcare solutions. Now, very important. They have expertise in mass screening, diagnostics, and healthcare services which are used by eminent hospitals, healthcare professionals, and government bodies. So, the clients, who are their clients? The clients are healthcare professionals, hospitals, and even government bodies. Now, what are mass screenings? It's like you are specifically testing a wide variety of people or a mass population. A vast amount of people are being tested for specific disease. So that's mass screening. Like there are many government schemes for mass screening or for disease and all that. So mass screening and of course diagnostics, seeing which disease you have and your health and all that, and other healthcare sciences services. Okay. Then in the era of digital healthcare, we are partnering with the best by providing a single online platform with healthcare products ranging from medical devices to medical consumables. Now, this is very important because majority of the company's sales and the form of sale of products. Okay, sale of products. And what are these products? They are not producing this. The product is like medical tech, medical devices. They are not producing these medical devices. They are partnering with the best. So the best medical medtech producers, medtech manufacturers, they're partnering with them and basically they're buying that and then selling to whoever needs them. They're trying to be a one stop solution for access to quality products, that is like medical technology and solutions, that is like laboratory services, diagnostics, mass screening. So they want to be a one stop solution. Now let us move forward. Yeah, forward looking statement. Yes. So in this is the infrastructure, structure, and development. Here we go. One global service provider limited operates with a dynamic and rapidly evolving industry. It's blending healthcare services with IT enabled solutions. So IT enabled solutions and healthcare. It's operating at the intersection of both of them. Intersection of digital health and technology consulting. So clinical diagnostics, mass screening, and now new thing, software development. As global healthcare systems are increasingly embracing more digital transformation like cloud computing and data analytics, all right, it is expanding its capabilities to serve both domestic and international clients. So we got a few keywords: software development, okay, that's a smaller one, but mass screening, diagnostics. Then let us move forward to this segment wise performance or product wise performance. Okay, so two core segments has demonstrated strong performance across two core segments: healthcare services and IT and software solutions. Healthcare again includes this, but now laboratory support. Okay, like in the labs, providing people and like information and help in labs, laboratory support. This continues to be the foundational revenue driver, particularly through institutional contracts and public health programs. So the government, okay, government schemes, they are an important revenue driver. They're important clients. Then, meanwhile, the IT and software solutions segment has seen accelerated growth fueled by the company's expansion into software development, consulting, and digital transformation services across industries such as e-commerce, banking, education, and biotechnology. All right, so the IT segment is now seeing better growth. And where are the clients? Like, who are the clients? E-commerce sector, banking, education, biotech. All right, so these are the clients. Now, what is the outlook for the company? They're poised for continued growth, driven by their dual focus on healthcare services and IT-enabled solutions. They had a recent merger with Plus Care International's Private Limited, all right, which has expanded its operational footprint. Hmm. So you got a few good things. I think they got a wide variety of clients now with this like new software segment. So that's pretty good. Now, key financial ratios. Current assets divided by current liabilities, 1.64 times. So current assets are 1.64 times, current liabilities 64% higher. Now, debt wise ratio, 1.21. Now, The lower this, the better. So this has risen. So that's a bit of a concern. Okay. Return on equity. Now, this is a ratio. Okay, to convert this into percentage, you multiply it by 100. So its return on equity for this 2024 was 100% return on equity. Net profit ratio, 11%. The net profit margin for, I think this is fiscal year 2024 actually. This, why is this fiscal year 2024? And return capital employed was 64%. Okay. Then in trade receivables turnover ratio, basically the higher this ratio, the better it is. So the higher it is, the better. I forgot the trade payables one. Then very strange. Now finally, let us go to the revenue. Okay, it's this is the balance sheet, and one important thing is this: the cash and cash equivalents portion. Let us zoom in. Look at this. So, as of fiscal year 25's end, the company had around in current account with banks, 15.39 crores, and in deposit accounts, 11.71. And finally comes this. Wait, where is it? Yeah, sale of goods is more double the sale of services. The majority things are being sold are goods.